Hello there traders, welcome back to another video. In this video I'm going to show you how to use the third candlestick and the fourth candlestick to at least make your sniper entries. Before we begin guys, I would like you to read the disclaimer, so let's begin with the video. We will start with the introduction here because this one is not a trading strategy, it's just a guidance on how you can see some of the trades that you lose might potentially have this kind of candlestick pattern. As you can see here guys, we have the bearish candlestick here, and then we have the bullish candlestick here. We have the bullish candlestick here. This is the bullish, meaning price is moving to the upside, and then we have this manipulation candlestick right there. So if we have a manipulation candlestick here, what I mean by manipulation candlestick is that price traded above this candlestick's high and then closed bearish. So this one will be a rejection candlestick. Also, this must be a doji or maybe a hammer. They all work the same. And then we have this high, meaning price is like this. It moved to the upside, made a low, moved to the upside, made a low, like this. So right now, if we look at this price section here, price is looking like it's going to the downside. But then what happens if price decide to move to the upside aggressively and then close bearish again? This is what we need. So from here, we will be looking for any retracement to make some short positions here. So what I mean guys is that here we would like to see a candlestick like this that spikes above this high here, or maybe this one. Sometimes it can even spike above this and then it will close bearish, maybe something like this. Then on the next candlestick guys is when we will be looking to enter the market to the downside. We will be looking for the market to push to the downside around these areas here. Okay, I hope you understand it clearly on this one, because it's not really that difficult, but you have to read price action in a different way. So what I mean is that we have to see two rejection candlestick. Like here we have the first one here, never mind my lines here, but at least you can see we have the first manipulation here. This is the first manipulation, and then we have the second manipulation here. This is the second manipulation. So meaning price was doing something like this, it broke this highs here, and then suddenly the market shoot to the downside. We have two manipulations here. This is what we need in the market. Okay, I hope you understand it clearly on this one. So moving forward guys, we will do something like this. The market will look something like this, especially in the lower time frame. You will see that we have a lot of manipulations levels here. So what we need is to wait for the second manipulation, and then we'll be looking to enter the market right here sometimes, but it doesn't always work like that. Sometimes the market can be very aggressive and then never retraces back to these areas here to make a new low. So what I mean is that in most cases price will be volatile in both direction of the market, making it very difficult to execute trades or getting stopped out a lot of times before price can move in the anticipated direction that you will be predicting. So I'll show you some couple of more examples to understand this candlestick pattern very clearly, so that at least you can understand it and avoid it, or maybe at least trade it when you see it in the market. So let's look at this one here. We have this candlestick pattern here. We have the first manipulation level here. Price will look something like this. And then from here, because you already know that sometimes the market can manipulate the first manipulation candlestick pattern, and then you will be expecting the market to make the second manipulation level. So meaning anytime if price passes this area here, you will be looking to enter short into the market. So these ones are for those who want to get into the market very early. Okay, and then if you see something like this happening, so the next candlestick is this one that you are looking to trade. But if you have entered here, that means you'll be safe throughout. Okay, I hope you understand this candlestick pattern very clearly, because it's not that difficult to understand it. So right now this will make you a better trader, but it also help you to understand price action when you move on to the lower time frame, to expect something that is very difficult to trade for most traders. So let's look at another example here. In most cases, price is likely to retest the open of the manipulation or rejection candlestick. Like this, we have the first rejection candle here, and then we have this candlestick here, and then followed by a second manipulation level. In most cases, you will see that price is likely to trade here or to trade here. So you will be expecting the market to reject to these levels here. So guys, to understand this very clearly, you have to consider the open and the close here. This is where price is likely to come and retest. So what I mean is that in the lower time frame, if you have this line here that is on this candlestick, you will wait for the market to trade above it, and then you will put a line here on the first rejection candlestick here on this high. This is where the market is likely to trade in most of the time, but it doesn't always work like that. So if you are in this, let's say maybe you are in the 4 hours time frame, you'll be using the 15 minutes here. You will be looking to enter the market to the downside because you already know that the first candlestick was a rejection. So then you are waiting for the second rejection candlestick to happen here, so that you can look to enter the market to the downside. So another thing is that if we have the first manipulation, maybe you are expecting the market to manipulate here. This is where you will be looking to enter the market to the upside. But you have to be very careful. You have to at least make a trading plan to build a strategy out of this manipulation, the second manipulation candlestick pattern. You have to build it and make some rules so that when you move on to the lower time frame, you'll understand the market very clearly. And also guys, this one here is just a rejection candlestick, but also is bullish. This one is bullish. And we can clearly see that the market was trading to the downside and then it was rejected. That is why you see the market closing bullish here. But even if you try to enter the market, let's say you see that we have the first rejection here and then the second rejection here, you can still try to use this candlestick open and also use this candlestick low in the lower time frame to enter the market to the upside. This is how you should use this candlestick pattern. For example purposes, we can clearly see that we have the first rejection here and then we have the second rejection here. And then you can use this candlestick here, the candlestick open, to look into the lower time frame to enter the market long here. And you have to have a trading strategy to enter the market. Maybe let's say a confirmation candlestick to enter the market. But I'll provide you with some examples so that you can understand how you can use this candlestick pattern to your advantage. Because I know sometimes you can see a rejection candlestick here, but then you have the second one here. This is where, because sometimes I know you will miss this one here and then you try to enter here. So let's move on to a more practical example. We have this rejection candlestick here. We have the second candlestick, we have the second candlestick, but there is no rejection here and then suddenly price rejected again. This will happen maybe in a news event, okay? But then if you look closely, and let's say maybe the market is trying to, maybe they say CPI or something like that, then you see that the market doesn't have a rejection here. You are waiting for this candlestick to happen. Then you put your line here. Then in the lower time frame, you'll be looking to make some confirmations, or maybe wait for a confirmation candlestick to enter long. Okay, I hope you understand it very clearly, guys, because it's not that difficult to understand it. To understand it very clearly, firstly you have to understand the first rejection and then the second rejection. You can clearly see another one here. We have the first rejection and then we have the second rejection here. But sometimes the market might not even retrace back here to move to the upside. Okay, I hope you understand it clearly, guys. I hope this video is not difficult. If you understand the first rejection, then wait for the second one. And in most cases, you'll see this happening. This will happen most of the time in the point of interest, or maybe in support and resistance levels, trend lines, whatsoever. It will happen most of the time in those areas where price is likely to reverse. So let's look at this example here using the lower time frame. This is the higher time frame. This is the higher time frame, and then we have the lower time frame. We have the first rejection here. Then we are waiting for the market to at least trade above this candlestick's high, or maybe trade to this level and then shoot lower. In the lower time frame, that means you will have these lines here. And I have also provided a video on how to trade this kind of candlestick, the open and close. So before we move on to the lower time frame, you will have these two lines here. Then price will move something like this. So but if we look closely, when price touches this line, there was no bearish candlestick to open short. But then price touches this open and close, and then also this is also a bearish engulfing candlestick, and also this is a rejection candlestick. So that means you will enter the market like this. This is your stop loss, or maybe you can put your stop loss here as L, and then you make your entry around, maybe let's say around the close, or maybe the 50% retracement, and then you will target to the downside, and this one will be a pretty easy trade. Okay, So let's move on to another example so that at least you can understand it very clearly. And also guys, if you look closely, we have the rejection here and then we have the rejection here. The next candle was bearish too. Even if you miss this one, you can still trade this one. Even if you are in the daily time frame, that means on the next following day you can try to look for the market to shoot to the downside or maybe target this low here. So let's move on to another example. We have the first manipulation, this one, and then we are waiting for the second manipulation to happen around this area to look for the market to shoot to the downside. This one here is the higher time frame. So let's move on to the lower time frame and see what the market will provide. So here we have the first manipulation line here, and then we have the expected manipulation to happen like this, and then the market to shoot to the downside. And you can also see a break of market structure. So if we move forward, we can see clearly that, okay, price manipulated this high and then closed with a rejection candlestick here. So that means we can put our stop loss here or maybe here, because we can also see that we have a zone around this area. So that means price entered there, the supply zone, close with a rejection candlestick, then we will put our stop loss above here and then look for the market to move to the downside like this. This is pretty much simple to understand, guys. I hope you understand it very clearly. Okay, if I am missing any information, you can also follow us on Telegram so that you can text me privately so that I can help you to understand this perfectly. So, and another example is this one here. We have a rejection candlestick here, we don't have another one, and then suddenly this candlestick rejected again, and we can see clearly that the market moved to the upside. This is how simple you can understand this. This is very simple concept to understand, guys. So let's move forward with another example here, guys. People will say this is a failed setup, but in reality this is not a failed setup. We have the first rejection candlestick here. This one was not rejected, this one did not reject this candlestick, and then we have the second candlestick which rejected the first manipulation. So meaning in this case we can look to enter the market short here on a retracement in the lower time frame. This is how easy you should understand it. I know this is not a complete video, but I just wanted to show you something that most of the time will happen when you're trading the market. You just have to be very careful when you're trading and whatsoever. And also guys, please consider subscribing to the channel and like the video, and also leave a comment below. I will check all your comments and respond to them. Don't forget to join our Discord and then Telegram to see our updates. So guys, I guess I'll see you on the next one. If this video was difficult for you, I'll try to provide another video. If you need part 2 of this video, please comment below. If you want a longer version of this video, please comment below. I guess I'll see you on the next one. Always stay safe, use a stop loss, and also use a proper risk management.